Morning, everyone. Thanks for joining us this morning. This is Matt Tour with Insurance Agency Marketing. Sorry for the little delay this morning. We're having some technical difficulties on our side. So glad you stayed on this morning. Glad you could join us today. Looking forward to a great webinar this morning. And we've got some great things to go over on the annuity end. We've got some good information we'll be covering here with Craig Geiger. Craig's our regional rep from Lincoln Financial Group. Glad you could join us today on today's meeting. Any questions you have along the way, be sure to get those typed in. We've been glad to get things answered along the way and get everything rolling on that situation. So I'll go over a couple of quick slides here. We continue to offer our new producer builder bonuses. You can earn some additional incentives based on production the first number of months, first 6 months. Anywhere from $100,000 up to $1 million, you can qualify for different incentives, anywhere from cash all the way up to different marketing items, including seminar systems and different radio shows, traveling, cash, iPads, a lot of different information qualify for. So definitely keep that in mind. We also have our business builders. You can do refer agents to us. You get referral bonuses based on that. We also have marketing reimbursement. Reimburse $100,000 for every, or $100 for every $100,000 you write through IMAS. A great back office support team, new business, creative, marketing side, a lot of good stuff that we have available through IMAS. On that end of it, we also have some great e-app technology through Firelight, and we're glad that we are able to utilize the Firelight system. Really makes the whole application process much easier. Great way to go on that side in order to get things moving through on Firelight. I know Lincoln Financial has been a very strong organization on that end. And as I mentioned before, we've got a great creative team, help you out with logo designs, websites, digital marketing, social media marketing. I know we see a lot of social media advertising going on right now, a lot of activity on that side. We also have our IMAS website available, www.imsinc.com. It's a great location to go to pick up different information on the annuities and other activities we offer through our group here. We have got our current annuity grid on there. We've got our long-term care products, life insurance programs available on the website. You can do term quotes, a lot of stuff you can utilize based on the website. Retirement Analyzer is a software program we've come out with that helps agents with presentations with clients. A great way to utilize the free software being licensed through IMAS, and you can go ahead and utilize that with client presentations, and really a great software program you can use with clients. As I mentioned, it's got some great information you can utilize based on the presentations you can print off. Really very colorful, a lot of different items of interest there based on that. And we do have a lot of agents that do continue to use this software program when they do meet with clients, and it's a good way to really take a look at where they stand today and where they're going to be 5, 10, 15 years down the road based on that situation. We do have our IMAS wealth management system in play, and it's a great way to utilize our services on the wealth management side. I know we have a really good group of individuals that work with that department. I know we've seen a really good growth in that side of the business. I know that we have a number of agents that utilize the wealth management side, including of our top 20 agents. I bet 80% of them are also licensed on the security side. So really, it's a great combination you can have, if you can offer both sides of the spectrum there. And they've got a lot of good investment platforms to choose from, really good client information you can utilize through that wealth management team. If you'd like to have one of our wealth management team individuals give you a call, kind of go over that process with you. Be glad to have someone contact you. I just released a poll here. You can vote yes or no. If you would like to be contacted by the wealth management team, they would be more than happy to get in contact with you on that side of it. I'll go ahead and get this closed up another 20 seconds or so. If you do have interest in getting some more information on that wealth management team, put in yes. I'd be glad to get someone in touch with you and show you what needs to be done if you haven't had your Series 65 completed, to help you out that whole process. Really good information they can go over with you on that side. Let me get that closed up real quick. Get that done. We always offer some really nice incentive trips here through IMAS. I know we've got our next trip coming up in, I believe, September of this year. It was an 18-month, actually 19-month qualification, ran through 12/1 of 2020 through 6/30 of 2022. So you have through the end of June to qualify for this great Mediterranean cruise. Basically, going to cruise around the Italian country there, stops in Croatia, Italy, Montenegro, Greece, some really nice ports they'll be stopping at there in the Mediterranean, and should be a fantastic trip by all. Looking forward to having as many of you qualify for this trip. I know we have a number of people on pace to qualify. We've already had, I believe, close to 30 people qualify for the trip already. So should be about 50 people on this trip, including spouses, to be over 100. Should be a great time. Good chance to meet other top producing agents. It's a first class trip. Should be a great destination for all. We look forward to having as many of you on that as possible based on that situation. We continue to offer our life and annuity academies. I know we've got one coming up in early April. It's going to be the 6th, 7th, and 8th of April. Should be an outstanding meeting. We typically bring in a number of high quality speakers, including individuals on sales ideas, going over the hottest items out there in the life and annuity market space, able to go over some of the latest greatest on the annuity end regarding index strategies, everything going into that side of it. Should be a really nice system we'll be having over that 2.5 days. We take care of your travel, your lodging, your food, drink, everything's taken care of. We typically bring in about 35 to 40 agents to each one of these. They're from all over the country, and you're able to pick up some different ideas from some of the different attendees. We bring in some of our top salesmen, go over some of the closing things they do, items they use to get in front of more clients, a lot of great sales information. Typically our sales specialist, Dave Pemper, would be there, and he will be going over some of the programs he uses in the field, be it seminars, informational meetings, whatever it may be. I know Dave's been in the business for over 30 years now and has been doing seminars along the way, done hundreds of seminars. He's on both the security side and the insurance side, so he does a great job on both ends. So that's something you have some interest in attending, mark off yes, and we'd be glad to put you on the list. And then we'll go ahead and contact you here in the next couple days regarding that system and that program. Will be coming up in April. We'd be glad to have you on board for that meeting. I'm going to close this up, get that closed. And again, that meeting is the 6th, 7th, and 8th of April. We'll do another one in June. I believe it's around the 15th, 16th, and 17th. So a couple of great meetings we have coming up in the next few months. We typically do about one of these a quarter, and should be a really good system available based on that. We also have presence on Facebook and LinkedIn. If you have interest in getting set up on either one of those, we'd be glad to get you going on that side, get things going on that end, and keep things growing on that end of the spectrum. So I'm glad to get you set up on either LinkedIn or Facebook based on that. Again, we are joined this morning by Craig Geiger. He's our regional rep from Lincoln Financial Group. Sorry about the late start this morning, Craig. And a couple issues come at the last minute, but we were able to get it up and running. Glad you could join us this morning. Can you hear me, Craig?
I can hear you. And
Good,
thanks for
good.
having me.
Hey, I'm glad to have you on board. Sorry about the, little delay there, but we got everything up and running. We got a lot of attendees this morning, Craig. So we're glad that we could have such a large group on this morning here on a Wednesday morning. I know it's about 1 degree here in Omaha this morning, so it's not a good day to have a picnic. I'll tell you that at this point.
Yeah,
Hopefully the
that's pretty
weather's
cold.
better. It's very cold, and hopefully the conditions are a lot better in Chicago than they are in Omaha, Nebraska today.
Maybe about a 10-degree difference. Maybe.
Yes, I bet. But we don't have all the snow you do, but we have the cold, I'll tell you.
That's true. That's true.
Very true. I'm gonna make you the presenter now, Craig. That way you can go through the
Perfect.
information on your computer there. I just switched it over to you so I can see you're on the system now. I know Craig's been with Lincoln Financial for a number of years and been in the business for many more years, so he's definitely got great experience in both the annuities and the life side of the business. So Craig does a great job with us and for us with Lincoln. So we're glad to get through the pandemic okay and moving forward, into 2022. And it's been a great year so far for us. I know Lincoln's been having a great year. We're definitely doing a nice block of business with you guys right now. Great company to use for your stretch accounts. Accumulation, I know they've got a couple new strategies they've come up with and really seeing some great accumulation plays come out with Lincoln. So look forward to hearing your presentation this morning, Craig.
Thanks, Matt. Appreciate it. Thanks, Iams, for giving Lincoln an opportunity to speak with you today. And real quick, Matt, you guys can see my screen, correct? I never want to
Yep,
assume anything with
I,
technology.
I got
So.
I got you on board.
All right. Awesome. Awesome.
Is that
Well,
is that you on the
thanks again,
bike there,
everybody.
Craig? Is that you on the motorcycle there?
Hopefully, in retirement, that'll be me someday. It looks like I'm pretty happy. So.
You're very happy.
Right, exactly. Well, again, thanks everyone for joining today, and thanks, Iams, for really giving Lincoln an opportunity to really speak with you guys today. Because yesterday, on the 22nd, we had a pretty significant launch on our product, and it's something that's new to us, but it's a little bit not so much new to the industry over the last couple of years. But we really felt that we wanted to continue to enhance our Lincoln OptiBlend Index Annuity product series, and so what I really wanted to talk to you guys about today was really what's new. It's always about kind of what's Lincoln added to the portfolio that's different. But before I even kind of get into that, let me just kind of give a quick little rundown in terms of the various index strategies that we have at Lincoln and on the OptiBlend contract. So we have the typical S&P 500 cap. We have the typical S&P 500 par, like a lot of carriers have. We had a pretty significant rate increase on the 15th of this month, and I'll show you what those rates look like in a second. But to me, it's really the next three up are what are really the differentiators, if you will, of Lincoln. What makes Lincoln different? Why should I look at the Lincoln product? Because if I'm looking at it through the lens of a financial advisor like yourself, I want to know what's different about this than what I'm already currently using. And so if you look at the next one up, which is really what's called the S&P 500 Daily Risk Control, this is something to kind of keep in the back of your mind that can be a really good go-to strategy for your domestic equity exposures for your clients. Because we are obviously still in a very low rate environment where the 10-year Treasury is still below 2% right now. I know it's kind of gotten above 2 and then it comes right back down, but the reality is we're still in a very, very low rate environment, so caps are still relatively low. So the idea of giving that client more upside potential tied to the S&P 500, definitely check out the S&P 500 Daily Risk Control Spread. This is a one-year strategy that is uncapped on the S&P, and the nice thing about it, though, is it's a little bit different than how most volatility control indexes work, meaning there are no bonds in the equation, which is really nice because typically bonds always seem to be part of that, and a good amount of money tends to sit in bonds, and a lot less goes to the equity side to give you more of that upside potential. So it's S&P 500 and cash, and this is a strategy that actually does include the dividends in the calculation, which gives you a bigger piece of that upside potential in a given year for that client. And the spread on this right now on our OptiBlend 10 contract is only 50 basis points, which means the client gets everything above that for the year in terms of whatever the performance is of that index. So definitely something to keep in the back of your mind. When you think about a cap's kind of like a line in the sand, right? That's the most you can do. Whereas this puts the client in a position that the S&P really goes on a roll, and you're looking at a really nice upside for that particular year. This gives you the ability to capture more of that upside potential. The next one up is going to be our Fidelity Index. This is a proprietary index that we have with Fidelity. Really, the simple of it is, if you will, is it's tied to the performance of around 125 blue chip dividend paying stocks. And of course, these are companies that you've heard of and your clients have heard of. And in fact, we even give out the stock listing report that kind of gives you a breakdown of what stocks are in it and what percentage weight they make up in the total index. And then they've got bonds to offset the volatility. So that's a 1-year par option versus it being a spread account like the last index we just discussed. And then really that's kind of where we get into the new index that was created last year that's really gotten a lot of attention at Lincoln, and that's really our BlackRock Dynamic Allocation Index. This is a proprietary index we created with BlackRock, and we created it with the idea of having more forward-looking look at the markets, kind of almost like the Wayne Gretzky quote, I don't go where the puck is, I'm going to go where the puck's going to be, kind of looking ahead and seeing where the upside potential is going to be in the marketplace. And if you look at all the major money managers, they're all kind of saying the same thing, and that's that if you just look at trends, if you just look at where the markets are going, they feel that global equity markets are going to have more growth potential the next 10 years than the U.S. equity markets. And I'll kind of show you where they're getting that and kind of where we're looking at this from a perspective of this index. So this index comes in a 1-year par and a 2-year par. And as of yesterday, we added a fee for upside option, which is called our Par Plus account. So this is the 1-year BlackRock index. But now for a 1% fee, you can buy up the upside. And so we'll kind of walk you through what that's going to look like. But like I talked about earlier, in terms of equity return forecast, just kind of forward looking, if you will, if you look at BlackRock, you look at State Street, JP Morgan, they're all saying the same thing. And they said the next 10 years, they're anticipating about a 7.2% average return over the next 10 years in international equity versus about 5.8% in U.S. equity. So definitely more upside potential, kind of looking to see, again, kind of where the puck's going, not where the puck is right now. The index itself is actually comprised of 12 iShare ETFs, which gives you full transparency in terms of what the index holdings are and where they can pivot to on a monthly basis. Every month, they reshuffle the deck or rebalance this index for you. So it's an actively managed index. The first thing you'll notice there, though, is it does, in fact, have an S&P 500 ETF in there in case the U.S. equity markets stay hot maybe for another year or two. That way you can get some of that exposure and grab some of that upside if that, in fact, is the case. But really, it's the next 4 down that really are the huge differentiators in this index. So you can see there that it has an EFA and it has an emerging markets ETF. This is what's going to give you that global equity exposure that typically out there in the marketplace you're not going to get. So it kind of puts you in a position to grab some of that global equity exposure and get some of that upside potential. But that's only half the story, right? The other part of the story is the one thing that we're all dealing with and we're all feeling every time we go shopping is inflation. And inflation has been on a tear as of late, above 7%. And so everyone's feeling, no matter what you're doing, whether you're buying a car, whether you're going to Target, you're doing anything, everything costs more. So with that being said, it's also nice to know that we also have alternative investments in this index that tend to be very good inflation hedges in high inflationary periods. So having real estate and gold in this as other asset classes they can go to get you growth potential and also be a hedge against inflation obviously is a good thing to have at your disposal. So these are other things that are in the index that I think are very, very important. And then the last part of it, obviously, is the fixed income component. Obviously, it doesn't just have treasury bonds. It does, in fact, have 2 corporate bond options in there that if volatility gets high and we tend to sit in fixed income longer, it's nice to know they have other fixed income asset classes they can go to, like corporate bonds with an investment-grade corporate bond, high-yield corporate bond, as well as the treasury bonds. But you'll also notice that it does, in fact, have a TIP bond, which is a very important bond to have in high inflationary periods that you can go to that can kind of give you some of that protection. So definitely something to consider there when you're looking at the BlackRock Dynamic Allocation Index. But let me talk about trends. And obviously, it's kind of follow the leader. The leaders tend to change, if you will, about every decade. If you look at the bottom left corner there of this piece, you'll notice that if you just go back to the 1980s and go all the way to today, in the 80s, international equity outperformed U.S. equity. If you get into the 90s, that's when U.S. equity outperformed international equity. And then again, in the 2000s, it was international equity outperformed U.S. equity. In all of the 2010s, U.S. equity has outperformed international equity. So if you can just see the last 40 years, the leader has changed every single decade. So the reality is, if we just look at history, which is tend to be what we can go and look at to kind of know kind of what's going on with the market, they feel that if you look at all the major money managers, that global equity is going to have more growth potential the next 10 years in the 2020s. So definitely something to take into consideration when you're looking at Lincoln, having really a huge differentiator in the marketplace that's going to give you the ability to get more of that global equity exposure, but also have other indexes in our product that gives you that domestic equity exposure as well, kind of giving you that true diversification across the board with our products. So with that being said, what launched yesterday, what was called our BlackRock Participation Plus account. So this is going to give the client the ability to allocate a portion or all or some to this account, where they can allocate that and get charged a 1% fee, but they're going to buy up the par rate or buy up the upside potential for that client. So this piece just kind of gives you kind of a snapshot, kind of looking back and kind of seeing how this thing would have performed in an up market versus, a substantial market. And obviously you can see here the performance difference is pretty significant when you're looking at the 1% fee account or the buy-up option versus the standard one-year BlackRock index. So this just kind of gives you a snapshot of what this is going to look like. And you're going to get copies of everything we went over today. I'm going to send it over to Matt, and he'll send it to everybody that was on today's call, where you can actually look through this a little bit more. But let me just kind of put this into motion, if you will. If you were going to run a quote or have IMAS run a quote for you, what would this actually look like? If I utilize our OptiBlend 10 contract today with the new rates that went into effect yesterday, and I allocated 100% to that fee account, that's going to give my client 160% par versus a standard 110% par or 115% par without the fee. So you're getting significantly more upside potential for that 1% fee. Now, putting this into motion, if you will, if we just go back 30 years, this thing would have performed at 9.42% average return over the last 30 years. Now, what I like to tend to do is not so much look at the last 30 years, but I tend to want to know, hey, how would this thing have performed in a really good 10 years, and how would it have performed in a really bad 10 years in more recent memory? And so what I do is I go to page 7 of the quote, and you can see here from 2010 to 2020 being an up market and it being a really good 10-year run, this thing would have done 11.57% return. But what I think is even more impressive is how this thing did during the lost decade, 2000 to 2010, which we know if you were in the S&P, you were still negative for that 10-year period. You were still not even back to even. In this example here, you would have done a 7.5% average return during that 10-year period. So definitely something to consider when you're thinking about this, is maybe at least a portion of the portfolio. And you can absolutely do a blend. You can just do a portion of this and maybe a portion into other index strategies to keep the fee structure down. You don't have to put all of it into this index. I just wanted to give you an idea how this thing has performed and what it would have looked like in a good market and a really bad 10-year market. Let me just kind of go over real quickly to the rates, just so you can actually see what the rates look like and what
Craig,
the difference
hold on for a
is going to
second.
be.
I just launched a quick poll here on people that want to get additional information on Lincoln. So if you want to vote on your interest in getting more information on Lincoln, I'll get you over, obviously, the information Craig's going over this morning. I'll get you over their current rate sheet, along with the licensing. I know we've seen a pretty nice uptick on business this year with Lincoln. They've really enhanced their portfolio with the BlackRock strategy. They're one of the very few companies out there that will do a stretch account on qualified or non-qualified funds based on the new regulations. So we do see a lot of business going to Lincoln right now on that side of it, and really a nice enhancement. And then with the IRA season currently underway on the tax season, we see some nice business going to them on IRAs, Roth IRAs. Some great combinations there based on what they offer on their strategies. So anything you want to talk about on the stretch side of it this morning, Craig?
Yeah, say on the stretch side of it, the area where we're seeing the biggest amount of growth really is on that non-qualified stretch side of the business, because a lot of carriers are not doing that type of business as much anymore. But with that being said, another area where we're definitely seeing tremendous growth, and to your point about, tax season, is really Roth conversions. And the idea that the fact that Lincoln actually does partial Roth conversion business. So you can move an IRA over to Lincoln and over the next couple of years do partial Roth conversions and kind of spread out that tax burden for that client. That's certainly something that's become more and more popular for sure.
Well, good, great. I'll leave this poll up about another 10 seconds. So again, if you do have interest in having me send you some additional information on Lincoln and their strategies and their portfolio, we'll get that out to you here this afternoon. And then I know Craig's going to be going over the rates here in the next 15 seconds. This is I drop this poll. He'll be jumping right into the rate sheet. So I'm going to go ahead and get this closed up here right now, Craig, and you can go ahead and move forward with the rates. There we go. It's back up.
Perfect. Yeah. Awesome. So this is the rate sheet as of yesterday. So you can see here that if you look at the 1-year BlackRock index without the fee, on OptiBlend 10, you're looking at about 110% par, and with the fee, you're looking at about 160% par. Now, with that being said, if you want to go a little shorter on the duration, if you do OptiBlend 7, you're looking at 105 par without the fee to 155% par with the fee. So that's just kind of gives you kind of a snapshot of the difference that you're getting with that fee option with this particular index strategy. But I also mentioned earlier that, it's always nice to have, pure diversification across the board and have other index strategies that really focus on different things. And so the other thing that I'd mentioned was that 1-year S&P 500 daily risk control, because if you're looking for an alternative to a standard S&P cap, definitely take into consideration when you're looking for, getting that client a little more diversification and having index strategies that kind of do different things. The S&P 500 daily risk control, again, this is going to be a nice, I think, complement to the BlackRock index. That's going to give you that domestic equity exposure, but for a very small spread. You're looking at 60 basis points on the 5-year, only a 55 basis point spread on the 7-year, and only a 50 basis point spread on the 10-year on a $100,000 premium. The client's getting uncapped upside on this index. Dividends are included in the calculation, and there are no bonds. So you're really putting the client in a position that if the S&P really goes on a tear, to capture more of that upside potential, but getting the dividends included in the calculation. Now, if you do like caps, we do have a 4.8% cap on the OptiBlend 10 and a 4.7% or 4.75% cap on the OptiBlend 5 and 7. So if you do like to have the cap, we definitely have that as well on our products. I'll stop there and see if there's any questions.
Yeah, I mean, one thing that a lot of people are looking for right now are some short-term products. I know that OptiBlend 5, really a nice 5-year contract. I mean, if you take a look around what other companies are offering on their strategies versus what Lincoln has. I mean, Lincoln has a really nice spread there between the BlackRock, the S&P daily risk, and the cap. I mean, you got 4 3/4 cap there on a 5-year contract. That is really a strong combination there based on those rates. And you take a look at the 150% par on that dynamic plus version, and then you have the 60 bip spread, on the S&P control spread. That's a great combination on a real short-term contract. So I know that you guys continue to offer that 10% free withdrawal in the first year. Very few companies have that available, especially on a 5-year contract where they can take out 10% after 30 days. Really a nice combination with that contract. I like that one a lot.
Yeah, we, in terms of, where Lincoln's playbox is, it's definitely the accumulation marketplace. We have every intention of probably getting back into the income rider game eventually as interest rates move up. But in the meantime, if you're thinking about Lincoln and you're thinking about kind of where Lincoln fits in your business, definitely it's going to be that accumulation sandbox, if you will. And that's kind of why we have the 5, the 7, and the 10-year product. But again, having the differentiators with the BlackRock index, having a 1-2-year par, and then third, having that fee option on the BlackRock 1-year index. Now you have 3 different variations of the BlackRock index you can choose from. We've also got the Fidelity index, which is a 1-year par option. You got the 1-year S&P daily risk, which is an uncapped upside potential index with a spread with dividends included and no bonds. And then again, you get the standard 1-year S&P 500 cap and par option inside our products. Now, with that being said, the only thing I probably would mention as well is just the fact that Lincoln does, in fact, have a top producer program. So if you are interested in doing more Lincoln business, typically on $4 million of index annuity business, that's going to get you on the trip, as well as access to our deferred comp program. So if you want more details on that, we can certainly share that with you off the call, and we can certainly give you more and more ideas of the different levels that we have in our Premier Partners program that you have access to through IMAS.
Do you have a location for this year's trip?
That still hasn't been released.
Okay.
Still hasn't been released. My guess is definitely probably going to be something that's going to be in the U.S. because of COVID and because of all the various things that are going on in the world. We certainly want to pick a destination where we could still have and not have COVID maybe impact that.
Sure.
Based on it being international. So
right.
That would be my guess, but I haven't heard anything as of yet.
Okay. Well, appreciate the information. And again, if anybody has any questions, we have a couple more minutes this morning. I know Craig went over a lot of really good information today on what Lincoln is offering, based on that new strategy with the feed BlackRock strategy they just came out with yesterday. You can see it's a pretty sizable difference in the amount of par rate you get by paying a small fee. And of course, you only pay the fee on the amount that's in that bucket. So if you did 25% across 4 buckets and you had 25% in that fee strategy, you only pay the fee on the money that's in that strategy. And based on what they have available, I would definitely spread the investment over, I'd say 4 or 5 of these based on the different strategies they have. That way you kind of have your hands in each bucket, and that way, if the S&P does really well one year, you got money in those strategies. If the BlackRock does better in another year, you got money in that. And if you had the Fidelity AIM strategy where that one does the best, they kind of feed back and forth based on what's happening in the market. Not one strategy is going to do the best every year. I think you're better off with diversification and having your monies in each strategy. And then the anniversary dates, you're able to reallocate your money. So maybe you're having better luck with the BlackRock. You want to put more money on that side of it. Maybe you want to put more money in the fee version because that's making so much money. I would definitely look at following what's making the best returns, and that's something you definitely want to keep in mind. Anything else you want to talk about, Craig, before we end the meeting this morning?
Probably the only other thing I would mention, and I think it's very important with accumulation type products and accumulation type business, and that's renewal rate integrity. And Lincoln's got a very, very good reputation of having good, strong renewal rates on our products. And we have actually 2 different pieces that kind of speak to that, which I'll include in the email that I'll send over to Matt that he can certainly share with everyone that's on today's call. That kind of give you one kind of an idea of how we've renewed on our annual cap strategy with our S&P, but also kind of giving you a snapshot of a live contract at Lincoln right now that actually renewed during COVID to kind of give you an idea like, hey, how did Lincoln renew during really one of the lowest interest rate environments we've ever seen, and how consistent was Lincoln in that process? And so, we think we've really got a great value proposition with having very competitive rates, having a lot of different choices and differentiators in our index strategies, whether it's BlackRock, whether it's the Fidelity Index, whether it's the uncapped S&P 500 daily risk control spread, and of course having the gold standard strategies like the S&P cap and participation as well. But we definitely feel we've got a really good value proposition at Lincoln for your accumulation business. But I'll make sure that I definitely include all of these pieces as well as that sample quote, just so you have something to look at after today's call.
Appreciate that, Craig. And again, this is Matt Tour. I appreciate everybody being on this morning. I know Craig did a great job on this presentation on the Lincoln programs that they have available at this point. And it's we're right in the middle of the tax season right now, and we're seeing some really good influx of business coming in on people looking at making SEP deposits, making IRA deposits. A lot of people looking at ways to save money on the taxes and everything else. So great time to get in front of more clients, doing your annual reviews with clients, see what they have available, based on some of the monies that were sent out earlier this year by the government. People have more money in their checking accounts. They want to look at investing some of this money. And the good thing about these Lincoln products is when the market does well, the client does well. When the market does bad, the client does not move backwards at all. It's just they keep moving forward. So appreciate the time this morning, Craig. Everyone that was on this morning, appreciate your time. Again, this is Matt Tour. If you have anything you need on our end, give me a call. I'll be giving everyone that attended this morning a call after the meeting today, and then we'll move forward. I'll go ahead and get everything out that Craig's going to forward to me regarding the pieces and get everyone, up to speed with what's available. And we're glad to see that companies are increasing their rates right now. This is really the best environment we've seen the last couple of years based on interest rates. And I think we're going to see better rates moving forward this year. And we'll see much better caps, much better par rates. And we're going to start seeing some really stellar programs being offered by companies. So appreciate it, Craig. Have a great week. Everyone have a great week. And we'll talk to everyone in the next few. Thanks a lot. Bye now.